Someone was asking for the link.
There we go. I'm sorry, you were saying?
Someone was asking for the link.
Oh,
I think Telegram. I don't think they could find it.
let's see, Telegram, let's see. Yep, okay. So let me get the link sent up. All righty. Voila. And I'll pin it so people know it. Yeah.
CJ,
Yellow.
are we still holding that affirm?
Affirm.
Yeah.
Let's see. I believe I can fly. Let's see. So what we're doing is, yeah, Amazon, Affirm, and Apple, they all became swings. So just hold on to it, okay? If you have a specific question on Affirm, we'll go over it. We are, you know, trading with the trend as much as possible. And yeah, we'll definitely get to cover that for sure, okay? So, so just to backtrack a little bit, you know, when the market moves the way it moves, we're able to book profit. The worst parts are when the market does not move and it just seems to float. And it has no sense of direction. Oh yeah, now I remember what I was saying. So when Jay Powell spoke, all of a sudden towards during his interview time at 2:30, they were asking this question, that question, and he was asked about the 75 basis points. He said that was not on the table or in consideration. All of a sudden, the market just started popping and going up. And then at that time, I was food shopping, right? Dropping off my daughter to her friends to study and food shopping. And, you know, I saw my portfolio, well, the portfolio that I'm managing for my clients go from positive 2.3 to like minus 1.5, minus 2. I mean, the whole portfolio. And I'm like, what the heck is going on? And, you know, they just happened to run with it. And I was not convinced with that. That was definitely a melt up. It was a relief rally. You know, they just wanted something to just be able to jump on it. And as it was going up, you just, the way I sensed it and the way I interpreted it was, as soon as people were hitting their minimum profit, because they were down, okay? The ones who were long, they were down. As they were hitting those, they were closing out their calls and trying to get out of the market as unscathed as possible. And I'm sure some people even sold at a small loss rather than the big loss that there was. And for that reason, I said, hey guys, you know, don't follow this, don't chase the people, because, you know, the people are running in the wrong direction. And as a matter of fact, I wound up getting, you know, more puts, averaging down on some of the holdings. And sure enough, you know, the next day, everything went to crap. Okay. People just woke up and realized that, oh, you know what? We are in a terrible economic market. You know, inflation is terrible. The 10-year treasury has gone up. The mortgage rates have gone up and staying above 5%. And all the reality started hitting. And then what happened? The institutions just started liquidating. And there has been 3 weeks of institutional outflows in the market. I mean, like huge numbers were coming out. I don't know how. I was looking at the flows as well, and I don't know how people were buying longs on some of these things. You know, they were going long on Tesla, they were going long on Amazon, Google, Netflix, Disney, and all these things. And I'm like, what are you guys doing? I thought you guys were the smart money. So there were some institutions that were thinking that the market has turned around. There were some institutions who actually follow Jim Cramer, which these days is not a smart thing to do, nor following Kathy Wood. It's not the smart thing to do. You have to trade the trend. Bottom line, you need to trade the trend. And don't listen to those, okay? Follow the price action, follow your support and resistance. Always keep in mind where the market is, where the economic health is, and trade accordingly, you know? So in the past month, for example, my accounts are up 22% when the overall stock market is down from, you know, -7 to -14%. Okay, so the hardest thing for me is just to not listen to people. Okay, so you should not listen to people other than me, but you know, you should not listen to people. The talking heads, rather. Okay, I should be more specific. You should be careful about listening to the talking heads, because when they come up there and talk, there's a reason why they're up there, and there's a reason why they're pushing certain things. Okay, so even like John Najarian, when he's up in midday and he does option calls, notice what he says. You know, I got into this earlier today. You know, he's already in it, and he's going to tout the plays that he's already in. And what happens is there are enough people to go, oh, all right, let's jump on this. And of course, there's a bump on the premium. Because of volatility, because of demand. And what do you think he's doing with his holdings? Okay, he's, you know, easing off of that, you know, booking his profits, you know, portion by portion. And the moment it shows the first sign of going down, he makes sure to close everything in profit. Okay, so there's a reason why he is on CNBC and he's talking the way he's talking. Okay, so even, I mean, not all the time, right? But even with John Najarian, if he is touting a particular stock, particular option, Bobby, if you can mute.
Yeah, hold on.
A particular option, you should actually be looking at that and saying, okay, let's see when the next weakness is. You're looking for that sell sign. You're looking for that down candle. You're looking for, you know, reasons to get in on it in the opposite way. You know, so that's what you want to be able to do. All right. Anyway, enough talking. The live trades. So on Friday, there were 3 trades that are not closed. Initially, there were day trades, but it went the opposite way. So they're swinging. Okay, that's why we do it like June 3rd. And so we are swinging. Let's see. Actually, Amazon vertical puts should be in profit. Okay, so if you had closed in profit at the end of the day, that's fine. But again, it was very expensive. It was $8.90. Okay, it means you need $890 to buy into this, because if you go out to June 3rd, the narrowest differential is $20. You know, so that's why we did 22.80, 22.60. In the long run, Amazon, I mean, if you look at the charts on the Indicator Pro, it's very clear that everything is pointing down. Affirm, there was a nice cheap one, $1.45. It was a vertical put. Just hold on to that and swing it. Okay. And Monday, I think there's going to be a pop. So Monday, typically there's a pop of, let me see, next week. it's Russia and Ukraine's National Day on Monday. Wednesday is going to be the big one, okay? Wednesday and Thursday. So Wednesday, you're going to have the core CPI numbers coming out. That's basically a consumer price index, which means inflation, okay? It is expected to go up to 0.4%. I think it's going to be higher this time. I mean, I think it's going to really print higher. When Janet Yellen and a bunch of other talking heads on TV are saying that we have reached the peak of inflation, that's all the more reason not to believe what they're saying. Okay, so how do I know that we will have reached the peak of inflation and the market has turned around? I will know when my put call outs are all losers. Okay, once right now I'm hitting 90%, 100% correct call outs, and it's paying really, really well. But there's going to be a flush out one of these days, so just beware. Okay, that's why you don't want an exposure greater than 20% of your total portfolio. Okay, because there'll be a week where I do all these put call outs and they're all in the negative and they all lose money and you're going to hit all your stop losses. And literally I'm going to be like 0 for 5 or 0 for or 1 for 9 or something like that. And that is going to be, one of the signs that we have maybe turned around. Okay, so I'm right now I'm perma bear. Okay, so next week, Monday, I think there's going to be a pop. Maybe even on a Tuesday, there's going to be like a relief rally going in for 2 straight days. And then Wednesday, it's going to show up at 8:30 in the morning, right? So it's before market. Yeah, we're not going to have a rally on Tuesday. If there is a rally, it's just going to be on Monday. Okay, but Tuesday, Wednesday, Thursday, I think it's going to be pretty red. That's the expectation anyway. PPI month over month for April is actually expected to go down to 0.5%. Supply chain issues, all of that stuff, it's going to come out. I'm expecting it to be red. I'm just like, sometimes I'm like, well, I'm leaning red, I'm leaning green. For me this week is just like red. Okay, if I'm wrong, I'm wrong. Okay, but that's the way I'm perceiving it at the present time. All right, so let me acknowledge our people who have joined us this week. Thank you, Bobby. Chandra is here, Latasha is here. I think Latasha, this is your first time, so welcome. Michael, welcome to the Premium Club. Thank you for joining. You're here for the first time. Michelle, my fellow Georgia native. And then we have Natalie, Saida, and where's your third partner, Natalie? Siri, where is Siri?
I don't know. She's supposed to be here.
I know. You three are always here. Okay. Sapana, you're here for the very first time, so welcome. And who's Zoom user?
Yes, I'm friend of Natalie.
Oh, you are? Okay. So Natalie's crew. Natalie, I'm just going to call your the members who come in and join just Natalie's crew. That means it's all your 3 friends.
Oh,
All right. Yes.
Oh no, I was just saying I was I think my thing name is like LV 2020 or something. I know I'm in your stock thing. I'm always writing.
Oh, okay. Okay. Good. I guess you're here with a different name today, which is fine. All right. So let's make it interactive. Okay. I want you to proactively think. I don't want you to just blindly take in what I'm saying. All right. Let's look at the market and let's look at the overall economy. And we got 10 brains here. Let's put it all together and kind of do a group project where everybody's interacting and helping each other out. All right. So let's talk about bullish case for the market. Okay. What are the bullish cases for the market that you are aware of?
Russia may announce that ending the war or something like that.
That would be a huge war. That would be a huge positive for the market. You know that it's going to jump. You know, it doesn't matter what. Everything is going to jump just because Russia is ending the war. It's getting expensive for them. And, they're losing a lot of people. It's costing them financially, economically a lot. So yeah, Russia ending war. That would be a bullish case. What else?
One other thing is when I look at the graph for the NDX chart,
Mm-hmm.
and I look at the month, you know, if you can pull it up to, yeah. And I noticed that it seems like if you do 40-day EMA, you notice that it's hitting that line similar to 2000, March 2000 and December 18, something like that.
So you do a 40-day. That's interesting.
I got that information at the 40-day and the graph, and the information kind of give a hint on that from one of the tweeters folks.
Okay.
Are you doing a month?
Monthly?
Yeah.
All right, let's take a look at the months. So looking at 40-day and 50-day, actually, let's change this to 200-day or 200 moving average. Okay, so this is what we see. So it's been 5 months of basically dropping all the way down after the inverse hammer right here. There's a death cross that took place 4 months ago. Okay, so even just looking at this, hasn't reached the 40-day as of yet. Let's change the 40-day into 26, which I think, no. Okay, so it has reached the 26. That's if you look at it on a monthly basis. Okay, if we're looking at the weekly basis, this is what we see. So we're looking at 1, 2, typically the third one tends to be the longest. So if okay, so if it holds to this, I'm still seeing it negative. Okay. So I think if we look at it from, let's look at it from QQQ. Okay. So if we look at it from a QQQ, okay, so that's the other NASDAQ, okay, but it's from Invesco. What we are seeing on the monthly is that it is hitting the 200 moving average. Okay, so understand this. Here's your QQQ, and look at the trajectory, right? So from a long-term perspective, this is it is a correction, but it's not that big of a correction because you're looking at from 400 dropping down to 309. That's a 25% drop in relation to a lot of the stocks that are down 60 to 80%. So from a QQQ perspective, okay, looking at the monthly, it is hitting the 200 mark, okay? So 200 MA monthly QQQ, and I think you can do the same thing with SPY. Let's see. Well, when Kyle comes, we'll definitely cover that. Okay, so we may be at that situation. Any other bullish cases? Speaking of Kyle, hey Kyle, bullish case for the market moving forward. All right, so let me mention two quick ones. It could be that inflation has hit its peak right now, okay, and the person was not wrong, and the person was correct. It could be that FOMC is doing its job. Okay. There was a third one. Oh. Supply chain gets eased up. And COVID restrictions get removed all across. So outside of China, everybody else is removing their COVID restrictions. And one of the key ones to drop for America, okay, I'm talking about the US, is if you travel outside of the country and you come back, okay, right now you still have to test negative within 24 hours before you can re-enter the US. Okay, so that's huge. Now, soon and very soon, they're going to change that. Well, CDC is fighting it. I don't know why, you know, for the life of me, they're just so out of tune. But in any case, and here's the thing too, the moment the COVID restrictions stop, you know, I'm planning to travel as well. Right now, I'm staying in country because of the restrictions, right? I don't even want to go to Mexico, okay, to Cancun for a week, okay? Because hey, you know what? I can trade from Cancun. I can just get an Airbnb at like 25 bucks a day, be 5 minutes away from the beach, and I can trade in the mornings, you know, do the day trades, hit my my profit targets, and just go to the beach all day, right? But you still have to get tested, and then you cannot return unless you test negative. Now, I don't see a big problem with it, but I don't want to go. I just don't want to deal with it, you know. But once the COVID restrictions get removed in the USA, such that as long as you are vaccinated and you show no signs of you know, illness of any sort, you can just readily just come back in without any issue. That's going to open up a great deal. That's why Expedia will benefit a huge deal the moment that is announced. Okay, and I wish they would announce it already. Okay, but our present administration, our CDC is just not cooperating. Okay, so if all of those things happen, it would be a bullish case for the market. All right. What are the bearish cases? Obviously, inflation has more to go. Anybody else? Do not be afraid to be wrong. Okay.
Interest rates.
Yep. Interest rates will continue going up. Okay. So we are looking at as much as 3 to 4% being raised over time. Okay, so the next FOMC meeting, they're expected 50 basis points, and then the next one, 50 basis points. So as interest rates keep going up, it puts a lot of pressure on the economy. As interest rates go up, it's bad for growth companies. Okay, so that would be a bearish case for the market. Anybody else? Something else that you've read, that you've seen?
Commodity pricing.
Solutions. Okay, so keep in mind, wheat production, the largest wheat production in the world is Ukraine. 40% of the wheat comes from there. They have not been able to plant in peace because of the war. So there will be a major food shortage. Okay, I don't know if, and I don't like to be a conspiracy theorist when it comes to something like this, but have you noticed that there have been over 13 or 14 major fires or destructions of centers, food centers all across America?
I actually was just talking about this in another group. It's something like 40 in the last year, and Cargill just caught fire, and something with the avian flu. Like, it's one thing after another.
Yeah, I've seen that too, CJ.
And then the question is, what effect will that have on inflation? Especially on food items, which affects
For availability.
what's that?
Let's even think about availability.
Or availability, food shortages. Okay, so that'll be a bear case for the market. Anything else? Anything else?
Reduce of job hiring, like Facebook that happened. Maybe there's another big one that coming out, that kind of news.
Okay.
Impacted.
Okay, so definitely there's a lot of demand each and every single time. You see the JOLTS numbers every month and you're like, what the heck is going on? That can easily turn around real quick. Okay, there's actually an increase of initial claims this past week. Okay, and nobody paid attention to that, but you're like, huh? What in the world is going on? Job participation has increased dramatically in America to I believe 72%. Is it 62 or 72? I think it's 72%. No, that's too high. 62%. Okay, so a lot of people have gone back to work. Yet why is there a job claims taking place? So that kind of raises some eyebrows, not a whole lot, but it does. Okay, so those are all cases for the bear market. Okay, so have this. Let me, where should I post it? I'm going to post it to upcoming earnings. Okay, these are all the earnings that are coming up this week. Play it safe in general. If you're going to do a lotto, make sure that you do it with money that it's already been, you already made it. Okay, that's house money. But looking at it right now, Palantir, Upstart, SoFi, Disney, Roblox, AMC, I think it's going to be bearish. Oxy will be bullish. TTD, this one is going to be wild. This can surprise up to the upside or to the downside. Peloton, I think is going to be bearish, but there isn't much to go down to, BioNTech, whatever. Coinbase, okay. Probably bearish. I don't know TSN. This is a Norwegian cruise line. It's going to be bearish for now, but I think their prognosis towards the, what do you call that? The forecast will be positive. I don't know 6. Is that 6 Flags? Firm, okay, is also coming up for earnings. Okay, so that's one reason that we're holding, and I think it's going to disappoint. Okay, so since we're already in it and it's only like $1 and change, I'm planning to hold it through the earnings and make that into kind of like a lotto. Novavax, I think it's going to surprise downward. Unity Software, this is the metaverse right here. Okay, Roblox and Unity Software are hand in hand. So whichever one goes first and whichever one has positive, negative, I think it'll impact the next one. Ribbon, negative, I don't know. Cody, so Under Armour was disappointing. It went down 25%. So I think Cody may be bad. Clover, bad. Ader, that's a meme stock. Dutch Brothers, I think this will be a good surprise since Starbucks did well. Ride, they're going to have supply chain issues still. Yeti will probably be positive because market is opening. Same thing with Win. I never liked the tattoo chef. Fiverr will be negative. I might look into Fiverr and play a lotto because this could drop 20%, but it's going to be very risky and very costly if I'm wrong. Lemonade, nothing proprietary right now on Lemonade. I don't know Party, I don't know ADAP. So that's where, that's the earnings for the upcoming week. All right, so I'm going to post up the bullish and the bearish case here on their upcoming earnings. Let me show you another quick way. This is what I call the lazy man's way to play at earnings. Is go to FinViz, right? And just look at the earnings releases right here. And it'll tell you. So May 9th, this is before earnings. Okay. Palantir will come up, Elon, JLL. And then this one is after the market. Okay. So that's playable if you want to play the market, play earnings before it happens. Zynga will probably also be bearish, but again, how much further can it go down? It's already down to $8, right? Upstart, $83. Yeah, that's credit services. That's artificial intelligence credit services. This one could go either way. I mean, it could disappoint and drop. I mean, look at how much it has dropped since, right? I think that it has a possibility of it to drop to like $70, or it can really, really surprise because people are just short on money and they want to buy stuff. And so because of inflation and everything, they all started to apply for installment payments on large items, and it'll show up on their bottom line. And this thing could blow up past 100. Again, it's a crapshoot. You're much better off trading these after the market. Okay, so what did we do this past week where we basically traded it after the market and we were able to make money? Okay, Wayfair, okay, disappointed, went down 20% after earnings. We went in, so it was a 73 put, and this thing was slow in the beginning, and then the next thing you know, it just started crashing. And I think I sold everything. I had like 2-3 of them on the house, and then sold another one on Thursday, sold another one on Friday, and just completely cleared it. Okay, and was able to bank on this thing, and make lots of money.
Can I ask you earning play question?
Yeah, go ahead.
So recently I noticed that the implied move, you know, let's say some ABC implied move it's supposedly average going out like about 10%. But I noticed I know there's quite a few number of stock that doesn't move out a lot. It just pretty much didn't move anywhere.
Yep.
It just stick in the middle.
Yep.
Do you have any insight? Would be how why that could be? Could it be because of the market is stretched out, exhausted, it's going down too much, and people continue to hold it and they don't want to buy or sell?
It's many different factors, and every single one that you mentioned could be a factor. But if it doesn't move a whole lot, it's basically saying that the earnings report came in basically in line with earning whispers. So that's why you'll have certain stocks where it'll beat top and bottom line, but it barely moves. Well, that's because the earning whispers amongst the major institutions was like, oh, they're going to come in at this price. They're going to come in at this earnings per share. They're going to come in at this revenue. And it actually winds up hitting their unofficial numbers. So then it doesn't move. Okay. You'll have something where, who was it, where the numbers came in and it beat earnings per share, but the top line, they missed on revenue. And the darn thing goes up like 7-8%. And you're like, what the heck? Well, that's because they're earning whispers. Okay, so that's one of the key reasons that you can play it afterwards. Okay, and the ones that you want to play are the ones that go double digit. Okay, so Wayfair was like that. There are a few others. Carvana was like that. Well, this one was like 5 days after earnings, right? This week. Let me look at swings and what do we do? Anybody take a BBIG with me? That's going to be negative come Monday, but hold on to it. It's going to come down. Roku. Okay, for some reason my memory is starting to fail me, but that's the way I see it happening. Better, it's best to play. So do I personally play lotto? Yeah, I do play lotto sometimes. Okay, when I have a high conviction on something, but I'm not going to post it because I'm wrong 50 to 60% of the time. Which for me is okay, because if I'm right 1 out of 4 times, that's a home run. And that one right covers all my losses for the 3 that I was wrong in, okay? And it just, in spades, okay? Because I use, proper risk management and, anyway, I'm not gonna call it out, okay? It's easiest to play afterwards. Okay, so when you play it afterwards, the benefit is you already know which direction it's going to go. Like these were the major news. So here's Under Armour 25%, right? So you can go to Under Armour, which has dropped dramatically, right? Price is too low. Never mind. Not worth it. So yeah, so if the price is like $30, $40, eBay was the other one. Wayfair, eBay, Etsy. There's a 4th one. Anyway, so all those 4 I had mentioned on live. Actually, this is where I mentioned that live trading. So I only called out eBay and Wayfair, okay, and that paid out. But have you done Shopify, Etsy, Wayfair, and eBay after the earnings, in the morning trade? Okay, because these are the 4 that I was watching, right? During live trade. Had you entered all these 4, you would have walked out with profits. Okay, Shopify, you would have made bank, like a lot. Okay, same thing with Etsy. In the beginning, it was like recovering for a time, and it's showing a lot of strength. So there was no ideal entry for it. But at the end, it just paid a lot. Okay, so did I ever mention to trade after earnings? I think I belabored the point a lot. All right. So without further ado, I'd like to invite Kyle. Kyle, are you there? Are your kids driving you nuts? What's going on?
Yeah, I'm here. I was trying to get my, I was trying to download the COT data from the futures exchange, but I was having an issue. It won't load on my database for some reason.
Okay.
But I have my SPY chart up, but there's not much you can really tell from the position that we're at. I could go over it real quick, but
Yeah, go ahead.
I was trying to get the COT data up. Let me share my screen.
Yeah, I mean, if you could give us like a bull case, bear case, just like we had discussed, that would be helpful. Can everybody see his railroad?
Yes. Yes.
Can you see my screen?
Kyle, man,
Yeah.
there's just way too many lines. Might as well just, okay.
Yeah, well, it depending on the time frames that I use, these are all the support and resistance lines. As you can see on the FOMC, I drew this trend line here that's following here. When we had the FOMC pump, we
Yeah.
rejected on the 100-day and this blue trend line here.
Uh-huh.
Prior to that, we came down and bounced off this other trend line here, and we reclaimed this channel that's going on right here.
Is that the 400, 410 level of SPY?
Yeah, this right here was the previous low that we broke at 410, this red line here. We went up, broke through this channel, rejected, and we didn't even respect this channel. No bounce, nothing on the way down. Blew through our 26 and our 50-day moving averages on the 4-hour. And right now we're kind of in no man's land here from a TA perspective.
Mhm.
There's not much I can really tell you from a TA perspective. I do have these trend line here for around the 400 area, 398. That also matches up with the weekly 100-day moving average on SPY, which is right around 399. So going down further, this is what my target would be for a downside move. On an upside move, I would be looking at somewhere around 417. If we break through these moving averages on an upside move and we get out of this channel without any resistance, we could be testing somewhere around, I'd say 426 would be the 100-day moving average. But the market's so volatile. I was doing some futures trading, and it's just crazy with how volatile the market is with the large moves. Like my trailing stop losses will chase the move and get stopped out and profit right away because of how volatile it is. It's
Yeah.
just bouncing all over the place. It's hard to trade, but in options, it's all right.
So if you can stop right there, see the right after FOMC, the next day you have that huge candle down that breaks through.
Yeah, that was like a 180 point move in ES. That was crazy.
So
Well-
I want to, so here's a question for everybody listening in, okay? What is the likeliest theory that it actually broke through all of those levels and it dropped 180 points in basically in a nonstop fashion? I mean, if you look at it even on a 10-minute chart, you may have remembered, you may have seen my post on it, that it actually looked like like a double X diamond, double black diamond ski slope. I mean, you were just dropping. Okay.
Yeah,
What is your guess? Anybody want to
I
guess?
heard that there was some kind of error on an exchange, or that one of the institutions accidentally like dumped like 15 billion worth of securities by accident.
Yeah, that was Chase, I want to say, and that was Europe. But I think with FOMC, usually what they'll do is everybody rallies the market.
Huh?
They'll find what the notes are afterwards.
Yeah, when they
And
dig
they're
into
gonna
it.
push it up. It's a liquidity void. They push it down because everybody sells off, because smart institutions were buying down at the bottom of those W's at where Kyle's screen was, like everybody was buying up there. And of course, institutional selling is gonna sell when it gets high, right? They're gonna create this whole drama for FOMC. Oh, it's what we expected, yay. And those trend lines that you have, Kyle, I probably wouldn't even take those two into consideration. And I'd look at those going back down to 3,900, 3,800, because we
Ooh,
already broke 4,000.
okay, so
That would be my
This
thought,
was
but
this was our last FOMC when we pumped into the FOMC, then we sold off, bounced right off this trend line right here, and it converges with the 200, I mean the 26 and the 50 SMA, and we pumped and we broke back into this channel after we flagged out, and
okay.
we ran that for a while. We ran in this channel testing the trend line,
So
but this was crazy. This was a crazy sell-off.
yeah, so stop looking at the chart. Okay, this is not a technical question. Okay, take a guess as to why we had such a sell-off. Take a guess.
because they
It
had
has to
to
do
cover
with
shorts.
finances.
They had to cover their shorts. And then everybody
You're
sold.
there. You're there. You're within the ballpark. Michelle, you're within the ballpark. So they had to cover their shorts. Why? Why were they forced to cover?
Because they bought so low, then they bought, everybody has to be on the other side of a sell or a buy,
Uh-huh.
right?
Yeah.
So, and this is something that I've been researching, so I don't know a lot about it, so don't listen to me, but that's my thought process.
So here is the theory. Okay.
Margin call,
Margin call. Bing. Who said that?
Bobby.
Bobby, you got it. That is the likeliest explanation, is a margin call.
Yeah, the other thing I thought was the robot.
Yeah, robots are not gonna take you down that many levels. So it could be, you know.
Oh, I mean, the algo's buying up and they
Mhm.
didn't unprogram, so they went down. Yeah, that I've
That
heard
could,
too.
it's possible, but the likeliest one is that Bobby mentioned, okay? So keep that in mind. The next time you see movements like this, you gotta try to think, okay, what's going on here?
Can you explain that more? Because like I said, I'm trying to learn about that and
Right.
I'd love to know more
An
about that.
institution that's holding positions, if they get margin called, their buying power, they would have to sell their assets to get their buying power back in a positive area. If they were short, but the thing is, like, they would have to be on the long side if they got margin called. Because
Exactly.
if they're short, they would be in positive buying power.
Exactly. They were in the long side. Think about that for a moment. They were on the long side.
Well,
Isn't
what
that
did
crazy?
COT data say about that? I wonder.
I was trying to download the COT data. I'm having an issue. I just closed my my NinjaTrader brokerage. I can't download the COT data. That's because I wanted to see what the net positions of the institutional traders was. See if it was negative or positive. For some reason, I'm I'm trying to fix it with my other brokerage. I can't get it downloaded right now. That's what I was doing this whole time. I was trying to fix the database. It won't load for me.
Maybe they're trying to hide something.
Well, what
I'm
I
gonna-
had heard is that smart money was long, and because they had
Yes.
gone ahead and bought everything at the bottom, right? So they already knew all those institutions were buying at really bargain basement prices, but did they keep buying? Like that, because that's what it sounds like you're saying. I don't know.
So again, all of these are theories, okay? At best, we're not on the inside, so we don't know, but at best we can guess, right? So what can we do for ourselves in order to, trade smartly, trade profitably? And this is where I want to kind of walk you over a couple of things, all right? So this is the indicator chart, okay? And this is the way I would want you to take a look on weekends, okay? So on weekends is your homework time. On weekends is your opportunity to look at, let's say, Datadog, and you want to be able to look at the fundamental analysis on a Datadog, okay? And you can read up on it. You can look at the financials on Datadog and take a look at its growth, take a look at what it's doing and the health in general, okay? So something like this is like really getting into the weeds of fundamentals. Something like this, it just gives you a nice snapshot, okay? It gives you like the overall grade. So there's a 4. Valuation rating is a 0. Why? Because the price earnings ratio is like 224 on a Datadog. So if interest rates are continually going up, what type of pressure does that put on Datadog? The only way for them to actually continually increase in price is if their growth is far greater than their PE ratio. So things like this are stuff that you would do on weekends, all right? Now, you can take a look at each chart and kind of do your own analysis as well and draw support levels if you want. So QQQ, I like the Q is better than the SPY because it actually moves in a greater volatility, okay? So for QQQ, what am I seeing? I am seeing it from, let's see. Yeah, so towards the end of the day, it was positive, but 4-hour chart, daily, weekly, monthly, quarterly, everything was bearish, okay? So one of the things that I'm able to do here, for example, is chart out the top and bottom range of the trade of QQQ this past week, okay? So right there, it went as low as 305, went up to 330, right now is at 309. So if it breaks 305, okay, for me anyway, if it breaks 305, I see that as a continuation downward, okay, on the weekly. We have, in terms of the strat system, it's a 3 reverse strat reversal. Like, funny name, but in any case, that's what you have on a weekly with the strats looking at it. Now, I would look, after that, I would look at the daily, and this is what I have. So Friday was the day that it reached its lowest point of 305 and change. I'm gonna move that right there. And then sure enough, it was during the melt up of FOMC that went up all the way there. So I'm like, okay, that's gonna be an anomaly. Let me bring this down to the next level, which is right there. So now my range is 305 to 325. All right, so I'm looking at the daily. What am I seeing? First of all, let me. Okay. So what am I seeing here? This is the top right here, okay? It reached, this was at the end of March. Since then, we've had a death cross and it stayed in that death cross since April 6th. So you have that drop, slight recovery, didn't get to cross, okay, on a daily, even though it went up as high as 347. But 2 days later, there's another sell signal and the trend is just bearish. So you had another recovery, and on Friday, this is Friday, okay, there's a sell signal. So forget for the moment that we are on a weekend, and imagine tomorrow was a trading day, okay? What we need to expect until proven otherwise or shown otherwise, work with the technicals and trust the technicals and bet on it, because everything is a risk, but you're betting on QQQ being bearish, okay? So I did mention on Discord late in the afternoon that, where did I say it? Yeah, that we are definitely in oversold conditions, okay? And I said that I may hedge OTM calls for next week. I'll see. So this is my own thing that I wanted to do. But as I was looking at the price action and looking at the daily and the weekly, I just said, no, I'm not going to. You know, yeah, it would have been a good hedge. Monday will probably pop for a day. I could possibly make, you know, a couple of $100 on it, but it was risky. It was not worth the risk of Monday seeing the futures down, and the moment the market opens, you know, it just, you have that type of long continuation. Because if you had to go by previous history, right? Look at this. What happened in the previous sell signal? That was down, down, down. What happened in the next sell signal? Down, down, down. Okay, black crow, black crow. So what do you think will happen in this sell signal? And more than likely, again, it could be wrong, it's down, down, down. So on a daily basis, it's not looking good. It is below the Ichimoku clouds, right? Notice where it breaks. It breaks at the very point where there's a death cross. Okay, we are way below the Ichimoku clouds right now. So everything is bearish. What is the one sign that there could be hope? Well, obviously we have the weekend, this coming week's numbers. It could surprise to the bullish side. But even Ichimoku right here, okay, why is it that you have this huge red cloud and then you have this small narrow green cloud before it turns red again? Okay, and this is the way to interpret it without going too deep into it. There will be a temporary rally, okay, not necessarily the length of this cloud, but it'll be a rally, okay? So maybe this will be like a Monday, Tuesday, maybe even Wednesday, Thursday. Maybe it could be a week and then it continues dropping, okay? So this gives you some hope that there might be possibilities that it'll go up, all right? So you look at that, you refine the ranges and you go, okay, good. If it drops below 305, I'm gonna get a QQQ put.
Hey,
You got that?
CJ?
Yeah.
On your cloud,
Yes.
right? So I don't use the cloud a whole lot, and I'm not trying to ask you to get all kinds of technical on me here. When it switches from the red to the green, right, where you showed us before and it was narrow,
Mhm.
what kind of time frame is it projecting? Do you think that might have been because of the rip up in FOMC, or like how, I know that this tries to prognosticate into the future more than being lagging, right?
Yep, yep.
So it looks like we, all right, if we're looking at market structure, we had our, higher high than our lower high, right? Where the death cross came, right?
Mhm, mhm.
Have a retracement, have a retracement. We've already broken our past lows if you look left,
Mhm.
right?
Yep.
So could that have been the rally to go back down? Maybe. Don't know. But so where that green turns to red, like what are you, if you looked at that, not thinking about FOMC or anything, you would think, hey, we might be going up a little bit before we go down? Like how far out into like that, where that green goes to red the second time, right? Because it's like it's red, green, red, right?
Right.
Is that crossover like indicative of like a time of when that's supposed to happen, or how does that work?
So to keep it simple, the answer to that is I don't know. The way I use Ichimoku clouds is very, very simple. Okay. Now you can go deep into the weeds, and it'll take you weeks for you to master Ichimoku.
Oh, I don't need that. I'm
Yeah.
just.
So the way to use it here on and you can turn it off so that you don't have to deal with it, right? And it keeps it simple and straightforward, because if you see this, you go, yep, okay, no problem. So what do you do with the Ichimoku? Okay, it's the way that I would use it is because here you have a buy signal, right? And it's all red on top. So, it doesn't predict this at all, right? So the way to basically see it is when it pierces the cloud from top to bottom, then it's bearish. When it pierces the cloud from bottom to top, then it's bullish. Okay, so generally that seems to work. Like right here, you see it there, you see it here, but you don't see it here. And you go, wait a minute. So it doesn't work all the time. No, it doesn't. It just clouds. It just tries to prognosticate. And the simplest way that I want you to use it and everybody to use it is this. If it pierces the cloud from the bottom up, it's bullish. If it pierces the cloud from the top down, it's bearish. So this is not predicted, right? So you have to go by the indicator, not by the cloud. However, here you have, again, if you didn't have this, okay, if you didn't have this, this is what you'll go by. All right, so you have a doji dragonfly formation. You have a sell signal, you have a previous sell signal. There's definitely consolidation that took place here when you look at the candles, right? Here's your death cross. So sell signal, death cross. So if you were here like that, okay, above average volume. So already you have 1, 2, 3, 4, 5 confirmations. This is, yeah, so you got 5 death cross included. So 6 confirmations that you can enter a put on QQQ, anywhere between 354 to 364. So the next day, this is what happens. Okay, so anywhere you could have even gotten it here at the 352 level, but let's say you got lucky and you got in around like 357. Okay, and right here, this is your put Okay, so you didn't quite get it to the top. You didn't get it way at the bottom, but you got it somewhere there. And that's your put at 357. Okay. You're looking at this and you're saying, is this a good entry? Am I risking too much? What is the risk and reward on something like this? Okay. So you're looking at, again, you have the sell signal, you have the crossover, you have the break of the blue and the yellow, you have the dragonfly, you have the previous sell signal that kind of adds to it, and then you have, you know, a lower high and a lower low. So if you had gotten in here, okay, you're 1 day late from here, but that's still okay. Okay, so you got in here, right? And this is what you would have seen each and every day. And you go boom, boom, boom. Oh, cool, keep it. Uh-oh. It's consolidating. Sell. All right, good. Uh-oh. There's your buy signal. So if you were swinging it, not day trading, but if you were swinging it, this would have been your trade. You would have gotten in at 357, you would have gotten out around 344. Now, if you were day trading, you'd be like, oh man, I could have gotten out at 336. That's $800 of profit that I lost because I was swinging it. I was day trading it. Yeah, but you didn't catch the bottom, understandable, but look at what you caught. You caught $1,300.
And basically, I guess with the clouds there, it looks like if it's under the clouds, it's still considered bearish.
Yes.
Yeah, okay.
So use it as one of the indicators, but it's not, you know, the one all end all. That's why whenever you see a sell signal or buy signal, you're always checking for confirmations. That's why you need 6 confirmations before you do that. Speaking of, this is for day trade. These are the confirmations for day trading. Let me post this up on right here. Okay, and this will be pinned at the top. So whenever you need this as a reminder, you can always go to the pinned section right here and you'll see it. Okie
Cool, thank you.
all right, so this is your daily look, right? Now, in a larger perspective, right, if you took the weekly, you could have actually seen weekly. This is what you would have seen, sell sign. So you would have gotten in on a weekly, let's say you got in around here. And this is like every Friday afternoon you check it, right? And this is what you see, right? So you wouldn't actually even have a close yet. You go, okay, this is still active. So for next week, it looks like it's going to continue going down. And I'm going to continue holding my QQQ puts or my shorts until I see a buy signal pop. So for example, here's your sell, and you came in here. Here's your doji right there, and here's your buy signal. So let's say you sold at worst case scenario, you sold it here. And on a weekly swing trade, you would have gained, you know, $3,200 on 100 shares.
That's nice.
Okay. Yeah, definitely. So when it trades down dramatically, like all the way down like this and all the way up like this, it makes sense to just swing it instead of day trading it. Okay, so next time we have a huge rally, okay, this is what we would have. Here's a buy signal, you get in here, and you don't sell it until here. So imagine if you had, this is like the at the pandemic, right? If you were at the pandemic, this is the pandemic, right? It's just dropping, 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 dropping. Finally, you see a buy signal, but it's weak. Here's another nice long candle, but there's no golden cross. So actually you would have got in somewhere here. There's your golden cross right there. Okay, so the next week you get in somewhere around the 204, let's say 205 range. Around there, okay? You would have sold it at the next sell signal. Right there. And that would have been a $6,000 profit per 100 shares of QQQ. Okay, so you could have hold it, right? You could have ignored this and say, hey, you know what? Let me look at the Fibonacci clouds. So there's a sell signal, right? You could have looked at, so this is how you use Fibonacci clouds, either weekly or daily, right? Or even day trading, by the way. When you see this type of move, especially after the 3 white soldiers, and then you see this incredible move like this, okay? This sell signal right here for the next 3 weeks would be seen as a relief, is a time of mild correction. And you go, you know what? My stop loss will be the moment it crosses over this line. Okay, because everything is unfurled. So even if it touches that or goes into it, you're not going to sell until it crosses this line right here, this bottom line. Okay, that is the, is it the 22? 21. It's a 21 EMA really. So as long as it stays up above the 21 EMA, I'm going to keep holding. And if that happened, you would have held it. You might have sold it here. I don't think so. But you would have held it all the way here. So that would have been a $8,200 profit per 100 shares. Okay, so here's your daily swing, a weekly swing. Here's your daily. So that's how you use Fibonacci clouds. Okay, let's look at the Fibonacci clouds on a daily basis. And this is where the green starts turning red. So once it starts turning red right here, this is your puts right there. Okay. So if you want to learn more specifically how each one works, like how do I use Fibonacci clouds to the fullest extent, auto fib and stuff like that, I will be making specific videos on these things, and I'm going to start posting it. I already have 2 videos up, so I'm going to start posting it. All right, so this is where we see it. And then the daily is what we're going to be using once the market opens. And when the market opens, we're going to watch this. This is our range now, okay? This is our zone. For next week. So if it cracks through here at the 305, okay, breaks through, we can get a put and take a risk at it, okay? Because it could go down and then, you know, all of a sudden rally. Obviously, you're taking that risk with CPI and PPI coming out, okay? But if it goes down below 305, I'm going to get a put, okay, at that point. If this thing rallies, okay, what I'm going to be watching for on Monday is, all right, this thing is rallying. It'll go something like, there you go. So let's say it starts rallying and it goes something like this. okay? Anytime it starts turning this way, and I see sell signals coming out right there, that's when I'm gonna get the puts. Why? Because I'm expecting Wednesday and Thursday to be bearish. So I'm going to go with my bet that it'll be bearish. I'm going to go with let's go back to this. So if I'm wrong on this, for that day is okay, because the daily chart the trend is bearish. And if I'm wrong on the daily, it's okay, because of the weekly chart is showing bearish. Okay, so if I get options that are dated like June 10th, for example, it gives me a good 2 weeks for me to start working on it and see if I have to cut my losses or I can end up in profit. So typically on a day trade, if it doesn't work out, I swing it to the next day. Typically it hits it. And if it doesn't hit it the next day, it'll hit it like 2-3 days later. Like for example, when earnings come up, like a firm, you'll have earnings coming up. Was it Monday or Tuesday? And then we'll play it from there. If that does not happen and there is a marked rally taking place on QQQ, let's say on Wednesday or Thursday, the numbers were fantastic, right? And I'm down 50%, 60%. It's going to hurt, but I'm going to have to cut it. Okay, so that's how you play. Okay, it's very, very nerve-wracking to try to take risks like that, but that's why you have risk management. So your risk management is no more than 5% on a day trade. Your exposure is no more than 20% on a day trade. So what does that mean? If you're getting into a position, okay, it should be no more than 5% of your portfolio. So if you have $50,000, the absolute maximum is 5,000. Okay, you want to be able to come in initially, enter with a 2% of your total portfolio, up to 5. Okay, so enter with something like $2,000 if you're able to get 1 or 2 contracts. If it goes down and you're losing, okay, scale in when you see an upward trend, there's a change and there's a buy signal and there's a confirmation for a buy signal or sell on the opposite way, right? Then enter in again. And at that point, you can go from 2% all the way up to 5%. But once you hit 5%, that's it, okay? Because if that gamble is wrong, then you have to cut it. And you just call it a mistake. It's a loss, okay? We're not here in a sprint, we're in a marathon. And we're not thinking trade to trade, we're thinking in large numbers. So that's why if you had 11 trades, you won 10 of them, okay? It's a great week. You know what's a good week, okay? You do 10 trades and 7 of them are winners, but 3 of them were losses. But you made sure that the 3 losses, you cut it according to your risk management, whether it be 20%, 30%, or 50% stop loss. Stick to what you decide is going to be it. Don't change the rules based upon each stock, okay? Unless you really, really know the stock. Let's not go there, but don't change the rules. Outside of extenuating circumstances, do not change your rules. Stick to it, and if your stop loss hits, just bite the bullet and get out. Just get out, okay? And count it as a loss. Great. Next time. Okay, the next time will be a winner. You know what's still a good week? You enter 10 times, 5 out of 10 times, 50% are winners. And the other 5 are losers. Wait, how is that a good week? It is a good week if you're practicing risk management. Because you're taking the winners based upon the indicator, okay? and you're taking it to, is that 10 minutes? Yeah, that's 10 minutes. Let's go to, no. Let me take you to Etsy. Okay, so yeah, this one was, see, Etsy, it showed strength. There was a buy signal, another buy signal. But had you entered even so anywhere here, you could have held it over for a swing and it would have dropped from like 92 to 86. Okay, so you could have gotten paid. Wayfair is the one that we hit like over 148% because we got in, actually got in somewhere, I called that out somewhere in the buy signal right here. So when I saw the buy, I saw that as a bear flag, okay? And again, I'm going by earnings. So I saw this as a bear flag, and you could have taken it all the way down here. Towards the end of the day would have been here. The next day would have been all the way here, okay? And if you held on and you saw it recover right here at the golden cross, you could have sold it and gone from, this is after earnings, you could have gone from 75 all the way down to 63. Okay, so on that option, it was like 10 to 12 options. I averaged about 110, 120% profit. I held 3 of them on house money, and I wound up selling it somewhere down here. Thursday and Friday, I just wound up selling it over here and said, you know what, I'm done. You know, I'm going to lock in my prices. I don't want to worry about Wayfair over the weekend. That has paid. And so Wayfair, it would have been a situation where I could have been wrong 7 times. If I was wrong 7 times and I closed out my losses at 30%, 40, 50%, right? Wayfair would have more than made it up just with this one trade, would have made up 7 losses. Okay, so play the long game. Okay, be methodical. Is risk management 2% to enter, 5% if you re-enter, averaging down with the signal. So if you're selling, look for another sell signal. If you're buying, look for another buy signal before you enter. Don't just average down for the sake of it. Okay, watch the charts. Exposure. Okay, so if you have something open, okay, and you open another one and you open another one, do not open more than 4. At that point, 5% each, you're at 20% exposure. Okay, and you have to watch out for the flush out. So if there's a flush out and you got 4 open positions and all of them go to minus 50%, minus 80%, that's a huge chunk of your portfolio. That's part and parcel of trading. It'll happen. So if that happens and the whole market has trended against you and you're taking those losses, look at your DTE. If you got a whole month, okay, you can hold on. If you got 3 weeks, you're cutting it close, because every day after, once you got 21 days or less on your DTE, your theta starts increasing. Every single day it starts incrementally increasing. Think of the snowball that rolls down the mountain. In the beginning, it's just a small snowball. It's starting to roll on the 3rd week. And that snowball is getting bigger and bigger and bigger and bigger, okay? Once you reach seven to 10 days, and you're down, 60, 70%, and you didn't follow your rule, that's when you have to swallow that bitter pill and say, oh, CJ, you stupid, stupid, stupid bleep, you idiot. Oh, terrible mistake. Okay, just cut it. All right, you have to think of it as you got gangrene, you didn't take care of it, and you got to amputate a whole leg for you to survive. So you need to cut it in order for your portfolio to survive. Just cut it. So worst case scenario, let's say all 4 of them go down to 0 because you just could not cut it. Well, guess what? You're still down 20%. You're only down 20% on a flush out. Okay? You're only down 20% on a flush out because your exposure was 4 stocks or 4 options and a total of 20%. So if you had $50,000, guess what? You still have $40,000. And you get to live and you get to fight another day and you get to recover the next week and the next week and the next week. So that's proper risk management of your entry per options as well as total exposure. So keep in mind total exposure. So if you have 4 things open and it totals 20%, stop, do not trade. Either close one in order for you to get into another trade, but do not trade any further because there's a flush out that's going to come. And if that flush out comes and you're exposed 80%, guess what? Now you're down from $50,000, you're down to $10,000. Okay. Oh, I'm not going to do that. Guess what? I said that many times. I said that 6 times, and I have burned over $350,000 not following my own rule. So please, and we're going to close it with this because we're now at an hour and 30 minutes. Please learn from my mistake. Okay, $350,000, that's a Harvard education right there. Okay, and the 2 things to learn is risk management and exposure, because flush outs will happen. And if it happens, it happens. Okay, so with that, any final thoughts, any questions that you want to ask before?
I just have one question for Kyle about where he's trying to find COT data, because I'm not finding anything that's really user friendly.
I don't, okay. Hey, Kyle, once you get it, can you post it up on Discord?
Yeah, well, I'm trying to see on NinjaTrader, you can every Friday the COT data is posted.
Yeah, that's proprietary. So, you know,
it-
that's
it
why you're not going to
shows
find
that-
it, Michelle.
It shows the open interest, commercial net, and non-reportable positions. I'm looking into the code. I don't know what's going on. It won't load.
Okay,
I'm trying to get it to load, but I'll post the screenshot of it later if I can get it working. I'm still
Or
working.
if you have like some kind of video about what you look for or something like that, like I can sift through the data, but I'm just still trying to figure out what to
I
follow.
normally just look at the large speculators and the commercial traders.
Gotcha.
okay. So I think that's enough. I've belabored the point time and time again. And so did I mention to limit your,
Can I ask you a quick question?
sure, go ahead, Michael.
I think I remember you sent the Indicator Pro copy of that, and I loaded in the Trading View. However, when I loaded it up for a 3-panel, it seemed like the 10-minute on the 2 left panel, it doesn't have the Heiken Ashi. So
Oh, okay. Yeah, go here on the candles and then go to Heiken Ashi. Haikanashi, let's all change it to Haikanashi. Haikanashi, yeah. So you can change it manually right at the top.
Oh, okay, okay. All
Yeah.
right, thank you.
So candles, okay. Once you're mastering this, right? Try to use candles thereafter. Why do I use Haikanashi? Well, it's to make it look neat and pretty, kind of like an iPhone, right? That's why I use Haikanashi, and it makes it easier to read. But with candles, you can actually read candles, okay? And it gives you a lot more. As a matter of fact, when we go to the Stock Indicator Pro, right? There are actually a whole bunch of other candle formations that I have here. I have the evening star, morning star, shooting star, inverted hammer, hammer, bearish harami, bullish harami, all of these things here. But I have turned off all of them except the buy, sell signal and the doji. Why? Because it gets really, really crowded and overwhelming for the new user. But as you get better and better at it and you're more familiar with it, go in here and you can turn on those candles. And it'll be helpful if you actually know what the evening star, morning star is, what an inverted hammer is as opposed to a regular hammer, you know, what a harami is, what is a bearish engulfing, you know, bullish engulfing, okay? So if you know these things, right, and you know how to recognize them, you can actually turn it on. But I have it off because if we do it this way, Haikanashi, right? And we turn off everything else. See? It's pretty. And if you have a phone app of TradingView and you sign on to the phone app, when you have it like this, much, much easier to trade from your phone. Okie dokie. Good.
Thank
If
you
you have
very
any
much.
other questions, DM me, DM Kyle for the COT information. Have a good weekend. Research your stocks that you're interested in. If you're able to join me on live trading on Monday and Friday morning, and would like to help by having your indicator up, and you know, because if let's say 4 or 5 of us can be trading and all of us are looking at 2 to 3 stocks, right? And we're paying attention to it every 10 minutes. I think we can help each other out. So
yeah. Hey, Kyle, I have a quick question. So in the group, they posted 1:1:2 in the futures. So what does that like mean? Like, can anybody tell me? I asked a question, but I didn't get a reply.
Let me see. I think that was Mike's trade.
Dakota,
Let me see what he posted. Swing trades. A
no, it's in the
1-1-2 trade.
futures.
Well, he's saying he opened he got, from just looking at it, what he posted, it looks like it's a jade, wizard, but with 2 puts instead of just one. It looks like it's a skewed jade wizard. He didn't post much details. Let me pull it up here.
Because I was trying to understand what he opened and what credit he got. I couldn't able to.
All right. Let me share my screen here quick. I'll pull it up for you.